Hello and welcome back to mentfx. So this is the third subsection of the supply and demand zones. And in this specific one, we are going to take a look at supply and demand zone 2.0s as they form and the refinement of supply and demand zones. So what happens is when you do have a supply and demand zone, as a lot of you understand, make sure you have seen the previous videos. Let's use one that is just easy to see. So for instance, we can use this one right here, right? The last up move. So let's actually replay this and just play this out so we can see it. Okay. Again, this is hindsight. I guess it's something that's already happened, but the point of it is always going to remain the same. Okay. What we have here is the last up move before the down move that has already hit the original supply zone. Thereby, for you, could be already you could already be out of this, or you could be expecting it to come maybe to a 50%. This is perfectly valid too, right? So again, as we discussed, you can have mitigation at the open and at the 50%. In this case, the open has seen mitigation, and the 50% can act as a new area where you can expect potential mitigation in the future. So this supply zone at this 50% is an area that you can use to potentially get involved when the price comes back to it. Now, a supply and demand zone 2.0 is when price comes into it and forms a new supply zone off that supply zone and allows you to get into potentially future entries. This is your first way of potentially confirming a supply or demand zone. So for instance, if you had this demand zone highlighted, because this is a valid demand zone at the time, and it came into it, but never formed a new one, then this demand zone does not matter. And instead of, losing the trade on just taking this one, you don't have to get involved in it at all. Now, similarly, if we go back and we take a look at some other demand zone, if we can find one that constitutes our actual setup requirement. So, for instance, let's look at something that's pretty good. That's played out multiple times, so we can actually take a look at it. I can't see any good examples here. Yeah, not really. I don't want to use that one. I mean, we can use this one right here. So the idea is that we look at our last down move before the up move, and that happens right here, right? Here's your last down move before the up move. Now this down move has this wick here, so we use that wick, okay? So this is a demand zone that you're waiting to get mitigated. Now, instead of just trading this as a buy, you can wait for the next demand zone to form, which is this demand zone 2.0, right? Price comes into it and then moves away, forming this new demand zone. That is a demand zone 2.0, and now you have confirmation that this demand zone overall wants to hold for higher prices, and you have a demand zone 2.0 that forms as a result, and price moves higher, mitigates it again, and then continues to higher prices. And that's one way to confirm your support, your actual supply and demand zones, okay? As you can see, price then does actually come into that one as well, so we can actually keep following this. This is this right here is a demand zone that was only mitigated at the open, as you can see, and we can look at the 50% now, and the 50% mitigation only happened here. Now, from that 50% mitigation, notice what price did. Price tapped in, but never traded above this. It never created a new demand zone, but then it traded in and then traded above this down candle, right? So at this exact point, it created a demand zone from this high to this low, and that's a demand zone 2.0 within that area, right? So that's a demand zone 2.0 off of this demand zone. So now you have the confirmation of a new demand zone, a demand zone 2.0 within the prior demand zone. And additionally, if you are using the idea of structure, we can now see this impulse, this failure to go lower, a new impulse breaking structure, and you can already put that together with the idea of structure now being valid, candlestick wise, and holding for higher prices. Now again, this is a 30-minute, does not matter what time frame you are on. This will apply to them all. Now, as we look at this, let's actually notice what we have occur in these zones here. So this is a new supply, a new demand zone, and we're waiting for price to come into it. Price comes into it, never trades above this. Price comes deeper in, okay, and then trades above this zone right here. So this actually becomes a new demand zone 2.0 within that. Okay, just based on our own mini validations, you can see that in this case, it actually gets wiped out. So this demand zone becomes invalid and wrong. However, despite that one getting traded through, we have another down candle before the real up move, leaving behind a new demand zone 2.0. So again, a demand zone 2.0 is just any demand zone that forms off demand zones over and over again. So that demand zone gets mitigated at the open, as you can see, continues higher, but does not get mitigated at the 50%. We draw the 50% out, and as you can see, that's where it mitigates before it meets higher price action above new structure. Now again, we're not just entering on demand zones using this. We need to understand how demand zones form, how multiple can form in a row on the way, and then partner that with everything else that we are going to learn as we continue speaking. So let's look back at this supply zone now and recognize that we had one form, we had it mitigate the open, and now we have the 50% that we can potentially look for, waiting for a supply zone 2.0 to form off it. So how would that look? We need to see a move into it, a move away, forming a supply zone, and wait for moves into that supply zone to move away from it again, expecting prices to drop as they begin to give us more supply zones and supply zone confirmations. So we get this move down, price comes up to mitigate more, price comes up to mitigate even more, comes up to mitigate even more, and then drops off. Now, even though it didn't hit the 50%, this is still a valid mitigation, and you can use this newly formed supply zone because remember, in the future, we will talk about structure and confirmation structure and how as structure breaks down. So remember back to where we spoke about structure breaking. If structure broke here and left the supply zone, then we can already shift our potential bias bearish and then get involved on the supply zone to go bearish again. So now you can start to see how we're partnering the idea of a supply zone being met with a supply zone 2.0 left behind unmitigated and putting in new structural lows, thereby giving us a bias that we can now apply to the overall chart setup and get involved in sells on the way down. Okay, so that is a valid supply zone. However, we don't want to trade it just yet because we want confirmation of some sort, right? But this is still a valid supply zone 2.0. Let's wait. We have the breakdown. Price breaks down below structure. So based on the structural video you saw, right, we might be in bearish structure from here to here. There's really no big pullback yet. However, in structure based on candles, we've had this push down, this move up, and this validation structure. So we can expect price to keep holding this validation until it finally turns around and maybe continues lower. But all we have to do is recognize that this is validated and we have a supply zone in this area now. So that supply zone is fully valid for potential sells. Now, price comes and mitigates parts of it, parts of a larger supply zone. So again, if you were looking at a higher time frame, you'll notice that actually there was a beautiful demand supply zone right here that formed off that supply zone that actually did not get mitigated here. So maybe if you went a little bit higher, right? No, not even, maybe a 2 hour. Okay, so nothing there. So we can actually continue operating on the 15-minute, still expecting price to maybe come to this supply zone 2.0. On the 15-minute, as you can see, there is no supply zone since it's been mitigated with this candle. However, that does not mean that this 30-minute is not mitigated, right? So this one has not been mitigated, so we can expect mitigation there. And what do we see from price? Price travels back up, mitigating the supply zone, as you can see, quite perfectly. And now expecting the drop. Now, as price gets below this zone here, and this is the first time you're going to see something where a supply zone is not just denoted as one up candle before the down move, but can be this up candle before multiple down moves. This right here now constitutes a new supply zone 2.0. And similarly, you can look for confirmations to go short in this area here, or you can wait for breaks down in price again to show you that candlestick structure is still shifting bearish and look for confirmed or higher probabilistic moves from these areas to go lower. And this is how you utilize the idea of supply zone or demand zone 2.0s in your entire strategy. So we can wait for that sell to occur now. So we get this breakdown in price, and this breakdown in price gets below here. But as it's breaking down, notice what starts to form. We form a new final up candle before the down move. But then look, it gets invalidated here, so it doesn't really matter. But if we use the next one, this now is the second step of looking at supply and demand zones and recognizing that a candle after supply and demand zones can become its own supply zone, right? So now it's not just the last up candle before the down move, it's the last candle before the down move that has not been mitigated. So you can expect potential sells from here now or from here. So this is when you'll have multiple biases being put into place where you can expect certain things to occur from, right? As you can see, that gets liquidated. That one's not important. And instead, what happens is we can still have this one in mind for that mitigation, right? At either the open or the 50% to continue lower. And we can see what happens here. We don't get any of that. Instead, we form a new supply zone right here, right off of no other supply zone. There's nothing really that it formed it off of unless we were using a higher time frame. So if we were on a 1 hour, for instance, you can see that this supply zone was formed by testing the supply zone here, making a new supply zone 2.0. So again, based on whether you're bearish or not, you can expect a certain type of mitigation from this area itself, right? This is how you can follow a price all the way down. And there you go. And you see the breakdowns in price. Now, as price breaks down, it begins to form follow-up supply zone 2.0s. Now, these supply zones do not have to hold. All you have to recognize is that as they form, you have the areas where you are potentially looking to get involved in the future, right? And that's basically where price closed. So, you know, on open of whenever this happens, we can potentially expect sells or mitigations at these areas here, maybe at 50%, to see either lower prices be met or to see mini mitigation before bullish structures put into play based on what we see of higher time frame structure. So that is when you're going to put your stuff together, because as you all understand, you cannot just solely trade supply and demand zones. Instead, you need to understand what the structure is telling you, where the supply and demand zones lie, which ones are still valid for entries and which ones are not, which ones form new ones off of previous ones, right? And from there, how you can look inside them for potential confirmations. Now, in the next one, this is basically how you look for not refined ones, but instead this is how you look for 2.0 ones that form off each other and how you can follow this down with structure for potential re-entries, right? So even though these lower time frame ones were not giving us great setups, as we got down or to a higher time frame, we saw the new supply zones forming off the previous supply zones that held absolutely perfectly. And of course, as you get lower, even inside this type of stuff, you begin to see supply zones that form on the way down that you can use to re-enter positions if you missed the original one. That is where confirmation will come from down the line. So in the next one, we're going to take a little look at refinement, and this is basically understanding that they can form off each other. So just kind of talking about this concept a little bit, if we move to the right here, you can see how they formed along the way here, right? We had this demand zone formed, and from that demand zone, we created this demand zone 2.0. And from that demand zone, we never had it mitigated, but then created this demand zone, and then created this demand zone. That demand zone got mitigated here and created this new demand zone right here. Then we had prices come down and make a new demand zone right here. We had that mitigated, created a new demand zone right here. Had that mitigated, created this new demand zone 2.0 off that, and so on and so forth, and we can follow that up. And this, again, will repeat on every single time frame. And what I mean by that is we can, again, just jump onto, for instance, a 4 hour, in this case. We can zoom out here, and we can just take a look at how even price played here, right? We have, for instance, the last down move before an up move. So let's look at it from this point of view right here, okay? So we have this last down move before the up move. It comes to mitigate it, creates the new down move before the up move. Comes to mitigate it, creates the new down move, taking into account the wick, remember, before the up move. Comes to mitigate it, creates the new down move. So again, this is that whole area plus the wick. So this whole down move before the up move, comes to mitigate it, creates a new down move before the up move, comes to mitigate, creates another demand zone off that demand zone right here, and from there creates a new demand zone that does not get tested. However, areas higher from a higher time frame demand zone get tested here, create a new one, right? And as you can see, we can follow this up with demand zone 2.0s that hold over time. And again, once you start to milk this or merge it with the mentfx block, with structure, and with candlestick structure and validation, you can begin to formulate a much more concise and refined bias about where exactly price may be heading. And in the next one, we're going to take a look at supply and demand zone refinements for potential mitigation, or actually anticipating where the mitigation can actually occur. So I'll see you guys in the next one.